Okay, we are digesting a whole bunch of earnings stories on this Tuesday morning, and we've got everything from tech to the restaurant industry reporting. We had those Shopify numbers, which, remember, this stock has been quite hot recently, and at the end of the day, some of the cash flow estimates for the current quarter fell short of Wall Street estimates, but we also had Restaurant Brands that had some better than expected numbers, and the company seems to be outpacing some of its peers, despite some of the worries about consumer spending right now. I want to bring back Philip Petursson. He's Chief Investment Strategist at IG Wealth Management for his take. First off, Philip, on what you take away from the earnings picture. I mean, you just mentioned, at least with the U.S. market, you think there's a good reason for some of the momentum continue. Mm-hmm. Is that case helped by, broadly speaking, the profit picture right now?
It is. When you look at it, earnings results have come in better than expected, fairly strong. When we look at it, we're at about close to 80% of companies have surprised to the upside. That's one of the strongest beats that we've seen in the last 30 years, right? There's only been 5 other times that we've seen beats stronger than that or at this level. So, that's good news, right? That's not just companies, really sandbagging it. It's showing that there is momentum in the profit picture. And the macro data that we look at says that this can continue. Right? There's nothing to say that the earnings outlook is going to weaken. If anything, it's just going to strengthen from here.
Well, and I mentioned Restaurant Brands. This is the parent company at Tim Hortons, had a good quarter. They also have Burger King. They're in the middle of a turnaround there, but the numbers were encouraging. And it's a good example of we speak so much about the technology stocks, but in the case of RBI, the shares went from, I want to say, 85 to 105 coming into today. And, there's always this narrative around the technology companies. They have big stock moves, but can they deliver? Here's a company that seems to be ready to provide some guidance later this week. So they're feeling pretty good about their business, which is interesting at a time when there are these questions about headwinds for consumers.
Certainly. When you think about the consumer in the United States, first off, we're not seeing as much stress on the consumer in general, but you have seen perhaps a bit of a shift away from the fine dining to fast casual down to fast food. Now, RBI is in the fast food segment, which tends to be less economically sensitive. You don't see a substitution away from fast food as much as you would, say, the linen tablecloth down to fast casual. So there, I would say, in the environment that we're in right now, again, I'm just repeating myself, but this is strong for a company like Restaurant Brands.